Hey guys, if you're watching this video, you probably want to know, is corporate development right for you? So by way of background, I work for a hedge fund covering public equities, and while I can't really talk about what I do now, in a previous life, I worked in corporate development for a big tech company. So if you're interested in what my experience was like then, stick around, this video is for you. But if for whatever reason you can't stand the thought of looking at my face for 10 minutes straight, I've got these lovely timestamps over here so you can pick and choose your own adventure. If you came from investment banking, you're probably familiar with an M&A group at the bank. Well, just like investment banks have M&A groups, corporate development acts as the internal M&A group for an organization. They're essentially responsible for the type of growth that you won't find at your neighborhood Whole Foods. That's acquisitions and potentially investments and/or divestitures depending on the mandate of the organization. One of the interesting quirks about corporate development is that the nature of the work depends a lot on the parent company and its needs. For this reason, the job often comes in many different shapes and flavors. I've compiled a short list of some of the flavors that I've seen, ranging from plain vanilla corporate development all the way to some of the more exotic ones. Now, if your role or flavor is not listed here, don't panic. It's quite possible that I'm missing some, but also double check to make sure that you didn't accidentally click on the job description for business development. I know, whoever came up with this totally non-confusing dichotomy should probably go drown in a ditch. Okay, so you decided that you want a job in corporate development. Well, the most common entry points that I've seen are from investment banking or private equity, which shouldn't be all that surprising given that the nature of the role tends to be fairly deal-driven. That being said, I've seen plenty of people from B school or, God forbid, if you're a second-class citizen, aka management consultant, get looks as well. It's certainly not a role that tends to be as pedigree-focused as, let's say, other roles on the buy side. I think the keys are that you really want to develop industry expertise in a particular industry, that you want to be able to think like an investor on behalf of the corporation, and that you're both a team player and a culture carrier. You might be wondering, so what does a corporate development associate or senior associate do all day? Some of this will depend on the flavor that you picked in the first part of this video, but generally speaking, a junior person on the corporate development team should be able to manage or facilitate a deal process from start to finish. That means you should have a high degree of comfort and own the financial models. You should be able to create industry landscape and do industry research. You should be able to build decks, as well as take meetings with both internal and external stakeholders. You should also be familiar with process-oriented tasks such as managing the data room, sending out NDAs, and creating and managing the working groups. In terms of my personal experience, I would say it probably looked like 60-30-10. 60% of my time was spent doing live deals, that's acquisitions and divestitures. I think the reality is that even for some of these larger companies with tons of money to throw around, they still tend to be very picky. So for every GitHub or WhatsApp or Instagram that you hear about, they'll probably screen between 50 to 150 targets. They'll probably build models and presentations and dig deep into about 4 to 5 of these before choosing to get in bed with any one of them. So from a numbers game, you can start to see why this would be the largest component of your time. This is also a period where your hours and your intensity might mirror the days in investment banking. Now, the second 30% would fall under what I call strategy and competitive intelligence work. That is looking at potential new opportunities for product or geographical expansion. Now, I might be biased, but I actually fairly like this part of the role because it tends to be more intellectually stimulating. We'd look at the market landscape, how much TAM there is, how much wallet share. We'd look at the potential competitors and identify each of their strengths and weaknesses and potentially identify a few that we might want to partner or pursue a strategic relationship with. This is also referred to as what some firms would call sourcing. Now, the final 10% is what I would consider more the administrative tasks. It's probably my least favorite part of the job, but any job at the relatively junior levels is going to involve some amount of grunt work. So for my team, that included tasks such as briefing investor relations in case the analyst community had questions about a potential deal. It also included interfacing with finance on the timing of certain synergies and expenditures that would go into the corporate forecast, as well as updating the accounting team on the value of potential strategic and financial investments. One quick caveat for those who are working at smaller shops with corporate development teams, your experience may be a bit more unstructured and less focused on deals. It's kind of like that bulge bracket versus boutique debate. One experience is not necessarily better than the other, but it has the potential to be a little bit more random. You might find yourself doing more sourcing or industry landscape work as opposed to deal execution, simply because there aren't as many dollars to put to work as a larger firm might have. One major difference, though, between corporate development and another principal investing role such as private equity is that you're basically a facilitator rather than a decision maker. You basically bent the knee to your division GM, who unfortunately calls all the shots, and there's nothing you can really do about that. So in terms of compensation, I would say that corporate development is probably one of those roles where you prioritize lifestyle over pay, but on a per hour basis, the numbers at a junior level still look pretty good. It's only once you take a step back and look at the aggregate numbers, base plus bonus, where other roles in finance start to pull out ahead. According to mergers and acquisitions, as well as some data points on Wall Street Oasis and Blind, associates can expect to earn anywhere between 100 to 160 all in, including base plus bonus. I know at my previous firm, senior associates all in made about 200. That was anywhere from 140 to 160 base, plus a 15 to 20% bonus target depending on performance, plus 10 to 20% equity on top. For plain vanilla associates, it's probably going to be between 15 to 20% less and usually no stock compensation. I would say that if you're working for a smaller company that may or may not be publicly traded, then the chance that you would get stock as part of your compensation this early on is pretty rare, but it's definitely one of the main drivers as you progress in seniority. Now, the reason that corporate development doesn't pay as much as some of the other roles in finance is that the firm sees this role as a cost center. Great to know that all your work ethic, hard work, and private equity and banking experience is not valued. I mean, it is valued. It's just valued at 15 to 20% higher than the other finance roles within the organization. Now, there's another way to look at it where corporate development actually does come ahead, and that is on a per hour basis. So if you plug into Smart Asset, which is just the calculator I use to calculate take-home pay, we can compare the compensation between associates in investment banking, let's say the associate 2 level, versus a corporate development senior associate. So for this calculation, I'm going to be assuming that the banking associate earns about $350 all in. That's 175 base plus 175 bonus. So if we plug that into Smart Asset, I'm getting about 8.5 every 2 weeks, or about 17 per month. If we assume that the banking associate's hours are a little bit better than they were as an analyst, let's say they're working 70 hours per week, then I'm getting an hourly rate of between 54 to 55 per hour after taxes. Let's do the same thing for the corporate development associate. If we assume 200 all in, I'm getting about 5.25 every 2 weeks. If we assume that you're working standard 40-hour weeks, then your per hour comp actually looks closer to 60 to 61 per hour. Now, obviously, there are a lot of variables that go into this calculation, but I think you start to get the idea. Now, this is really only true at the relatively junior levels. Once we're talking VP, director, and MD, then that's when finance comp really starts to pull way ahead of corporate comp. And if you're really crushing it, such as by subscribing to the 10 Bagger channel, then we're not even going to talk about it because that would just be an embarrassment of riches. But good on you for doing so. All right, in terms of the exit opportunities, I'm going to go over the 4 most common that I've seen in order from most to least common. The most common is B school. Usually individuals from my firm will go to HS or W, Harvard, Stanford, or Wharton. If you're a girl, chances are good that you'll go to either H or S. Now, I know it's totally a first world problem, but I know there's a solid number of friends and coworkers who, if they got into H or S, they would go. But if it's a W, then, they'd have to think about it. So just something for consideration. What a shallow, pedigree-obsessed world that we live in. Now, the second most common exit that I've seen is moving over to an operating role at either a startup or another organization within the company. I think business units know that corporate development associates have a high regard within the organization. They've toughed it out on Wall Street. They're kind of like the internal SWAT team of an organization. They're in high demand. So often they'll have the ability to move internally within the organization and often with a promotion. Now, the third most common exit that I've seen is moving to another corporate development role at another organization. Maybe you thought you wanted to do M&A for your favorite online dating company or your favorite app, but that turned out not to be the case. Or maybe your boss was a fucking psycho. Whatever the reason, you still have the skill set, you still have the expertise, so this ends up being a fairly common path. Now, the fourth most common option, and I just want to caveat that I haven't seen this all too much, is a move to another fund, be it PE, VC, or a family office. And I think there's 2 big reasons for that. The first is self-selection. So the guys who come to corporate development, they wanted a chiller lifestyle and they have limited desire to go back. And I think the second is related to the first in that because the culture is more laid back, there's perceived less ownership of deals, potentially less ownership of models, and that can rub some funds the wrong way. So just something to be aware of if you choose to go down this path. Of course, there are other exits too, such as leaving to start your own startup, which a lot of my friends and colleagues have done, but you don't really need corporate development experience to do that, so I don't consider that to be a true exit op. As we move towards the end of the video, I thought I'd do a recap. Would I do it again? Yes, I would. but with caveats. Let's talk about some of the pros with corporate development first. Generally speaking, the hours are a lot better and it's a lower stress job compared to IB or PE. On a per hour basis, you can actually come out ahead at some of the junior levels. Depending on whether you like the industry, you can build up a wealth of knowledge that you can then parlay to your own venture or towards your private markets investing. But will it make you rich? But luckily, this channel will. So if you're new to the channel, I'll be dropping my top stock recommendations and investing tips you won't find on other channels right here. In the future, I might do a day in the life video if that's something you'd be into. I know Angela has a day in the life corporate development video, but honestly, my days in a big tech role look very different from her role at a startup. So I figured the YouTube community would benefit from a second data point. Thanks for watching. As always, nothing is more important than your time, and I hope to see you on the next one.